Hello and welcome to Business Incorporated live on Channels Television. We see the trading day, that's moving along just fine, but here are the stories you should be looking at now. And if we see what's playing out here, we see Nigeria strengthens its voice on the global oil stage. NNPC's managing director has just been appointed as the country's new OPEC representative. And Google plans 4 Africa infrastructure hubs to connect newest subsea cables. Plus, in Rwanda, electricity tariffs will now be reviewed every 3 months, a move regulators say will keep prices in line with market realities. It's great to have you join us. Let's get a check on what's playing out with major markets that we track now. We see oil prices edge lower after the Federal Reserve cut interest rates. As traders, they weigh the start of a looser monetary policy against concerns about the U.S. economy. And we see Brent crude there was weaker this morning, and that continues into the afternoon trade. $67.40 a barrel, 0.81% down for Brent. And we see WTI down about 0.87%, a bigger move down, $63.49 a barrel. The Fed cut its policy rate by 1/4 of a percentage point on Wednesday and indicated it will steadily lower borrowing costs over the rest of the year, responding to signs of weakness in the jobs market. And lower borrowing costs typically boost demand for oil and pushes prices higher, but we'll see how the market continues to react to that. I will see the managing director of NNPC Trading Limited, Maryamu Idris, has officially been appointed as Nigeria's national representative to the Organization of the Petroleum Exporting Countries, OPEC. The appointment positions her at the intersection of domestic oil management and international energy policy. In her dual roles, Maryamu Idris will play a key part in shaping both national and international energy strategies. As a member of OPEC's Economic Commission Board, she will contribute to technical deliberations and policy recommendations. While continuing to lead NNPC Trading Limited, she will represent Nigeria on the global stage as the country's principal technical liaison within OPEC to ensure Nigeria's energy interests are effectively represented and aligned with the broader and international oil market cartel objective there. So we'll definitely be keeping track on what plays out there. Let's get a check now on the metals market. Gold retreated further today from the previous session's record high, pressured by an uptick in the dollar after the U.S. Federal Reserve adopted a measured tone on future easing following a widely expected 25 basis point cut. And we see the picture right there. Though spot silver trying to hold on to $42, just a 9 basis point drop. Last time we took the numbers up. Platinum, that's looking better, 1.23%, up $1,393 per ounce. But see palladium, a big hit down 0.72% at $1,166. So that's the picture right there for the metals market. Let's get a check on what's playing out in East Africa now. The Central Bank of Kenya, they've raised 61.4 billion shillings from the sale of a reopened 20 and 25-year Treasury bonds, reflecting stronger investor appetite for long-term government securities. According to the auction results, the CPK had targeted 40 billion Kenyan shillings, but bids surged to 97.3 billion Kenyan shillings, more than double the offer. The bank accepted about 23.5 billion Kenyan shillings for the 20-year paper and 37.9 billion Kenyan shillings for the 25-year note. The 20-year bond was accepted at a weighted average rate of about 13.58% with a coupon of 13.2%. The 25-year bond cleared at 14.14%, close to its 14.19% coupon. To some tech news now. Alphabet Inc.'s Google, they've announced plans to establish 4 major infrastructure hubs across Africa to connect its latest subsea fiber optic cables in a move that could transform the continent's connectivity landscape. The hubs, which should be strategically located in the north, west, south, and east of Africa, are expected to house critical infrastructure such as landing stations and data centers. According to Google Africa's managing director, Alex Okosi, the facilities will play a vital role in linking the company's newest undersea cables, Equino and Umoja, to local networks. And the government of Egypt announced that gasoline prices will increase by 15 to 25% starting in October, part of a broader effort to reform energy subsidies, fulfill commitments to the International Monetary Fund. And the government source told Al-Masri Al-Yum that the upcoming price adjustment is tied not just to global oil energy cost fluctuations or foreign exchange movements, but to an agreed roadmap with the IMF aimed at phasing out or reducing untargeted fuel subsidies. The move is set to aim a more flexible energy pricing structure that aligns with actual costs, thereby reducing indirect fuel subsidies and enhancing public spending efficiency. Rwanda's electricity tariffs will now be reviewed every 3 to 4 months to ensure they align with energy production costs, according to the Ministry of Infrastructure. The Ministry of Infrastructure, led by Minister Jimmy Gasore, stated that Rwanda will resume periodic tariff reviews, a practice that had been paused since 2020. The move is intended to keep electricity tariffs on step with actual costs of generating, transmitting, and distributing power. Factors cited include rising number of users, escalating operational and maintenance costs, and changing consumption patterns right there in Rwanda. And it's been a year since South Africa took Israel to the International Court of Justice. Now, a United Nations Commission of Inquiry has concluded that Israel committed genocide in Gaza, accusing top officials, including Prime Minister Benjamin Netanyahu, of incitement. Meanwhile, at the third annual activist symposium in Johannesburg, some delegates told our South Africa correspondent, Innocent Simosa, that trade restrictions, sanctions, and divestment campaigns remain powerful tools to hold governments accused of atrocity crimes accountable. Take a listen.
Yeah, we're from South Africa and we know what sanctions did to us. There were massive global boycotts, and we've got a global boycott, divestment, and sanction campaign. And I'd encourage people to go to the BDS website. There's a targeted campaign that is being run. Products like Coca-Cola, we need to be boycotting. We need to be boycotting Pepsi, McDonald's, Starbucks. But at a trade level, there is this complicity that we as South Africans continue to have, which is where we are sending coal to Israel. Additionally, we still haven't closed the embassy, and we know that Parliament has voted to close the embassy, and that is absolutely insane. So when you go to the Israeli embassy, there's still the flags flying. Of course, the ambassador is no longer here, but the embassy is still open, which is problematic, and that needs to shut. We need to say to Israel, we have no normal relationships with you while genocide is still being committed.
All right, so in Nigeria, the cost of indulgence, that's going up. Price of a premium hamburger, that jumped 20% in just 1 year, according to FDC data, now selling for as high as 18,000 naira. This comes even as headline inflation shows signs of easing. What's behind the rising burger bill? Joining us now, we have Toju Megson, analyst, financial derivatives company. Great to have you on the show, Toju. So we're seeing inflation easing, burger prices keep rising. How is this affecting demand, especially with younger Nigerians?
Good morning, Laddie. Thanks for having me. Yes, inflation is still relatively high, and it's actually been easing for the 5th consecutive month this year, currently at a rate of 20.12%. Although food inflation has been rising since the start of the year, and that has led to food inflation has been rising since the start of the year. But more recently, just in this past month, August, we've seen it ease by 1.65% to a rate of 21.87%. So with regards to the consumer demand now, I believe that consumers will be, with regards to the consumer demand, I do believe that consumers will deviate away from burgers just due to the skyrockets in price. Like you said, it's experienced a surge between 20% since last year. So I expect them to switch to alternatives such as shawarma, which are cheaper relative options, and also healthier options who are on the cheaper end, just due to the fact that an average Nigeria also spends between 3,000 to 5,000 on food per day. So when you take that into account, it's actually quite unrealistic that one is able to afford a burger in this climate.
I guess burgers are becoming a luxury at this point. But with the naira stabilizing around 1.5 to the dollar, I guess the burger outlets, I guess they're managing imported costs better, I guess.
Yes, exactly. Like with the trend that we're currently experiencing with the naira, is nothing but good news. It's nothing but good news. Making importation cheaper for these burger businesses to import their input goods such as cheese, um, wheat for burger buns, and beef as well. Again, like I said, this is only good for this this increase in valuation of the naira is only good for importers.
Right. So what about other costs that might, be hammering on these burger outlets? We know rents in Lagos, Abuja can get up to 20 million a year. Is that pushing the cost up of a burger too?
Yes, it is. But like I said, so with rent now, with rent prices being high, businesses obviously inevitably would have a higher operational cost, leading them to impose these costs onto borrowers by increasing the price of burgers. So what these businesses can do to actually make burgers more affordable for consumers is by adopting measures in order to probably diversify their menu, maybe including things on the menu that are less expensive, implementing combo deals, or customization of burgers. Maybe you don't want like if you don't want cheese in your burger, making the burger cheaper for yourself, or even improving their marketing as well to attract more consumers.
All right. I guess the basic burger now, I think that's about, 5K. You don't have all that fancy stuff in
Yeah.
there. Well, thank you so much, Toju Magazine, for bringing us up to speed of what's playing out in that market. Thank you.
Have a great day. Thank you.
All right, let's get a check on the markets now. See, building on yesterday's gain, the market opened on a positive note with the all-share index about 16 basis points higher, driven by gains in consumer good names like Guinness, up like 10%, Dangote Sugar, 333 basis points, Nigerian breweries, international breweries. So we're seeing a good move up there, 0.17%. That's for the NGX. The Johannesburg Stock Exchange, big, 105,000 level now. It did get weaker, about 104 yesterday, but now it's back above that, just 9 basis point rise for the intraday trade. Let's get a check on the other markets we track in Africa. We see the EGX 30, that's also riding high, 1% up. Nairobi Stock Exchange, that closed in the red yesterday, 0.26% down, 177 points. Let's get a check on the Gulf region. Now we see for the UAE, it's positive sentiment. We're seeing right there 0.30% for the Dubai index and the Abu Dhabi index. For Saudi Arabia now and Qatari index, we see for that part, so we're seeing a mixed sentiment, but it's still better with the Tadawul 0.58%, Qatari index 0.34%. For the U.S. markets now, U.S. futures rose slightly as investors continue to digest the latest rate cut decision from the Federal Reserve. That's what's on the mind of investors right now. See the Dow Jones Industrial Average, the futures are looking good, giving an indication of what we might see when the markets open in the U.S. So it's looking pretty good there for the tech-heavy NASDAQ. All right, let's flip over to Asian markets now. We see in Asia, the Nikkei 1.15% to the good, Kospi 1.40%. But let's flip over now and get a summary for yesterday's close with Maria Bird.
The U.S. stock market was mixed on Wednesday, despite the much anticipated interest rate cuts by the Federal Reserve. On Wednesday, the Federal Reserve did make a risk management cut to interest rates, a 25 base points. As the U.S. stock market did respond accordingly, as the Dow Jones was up at 0.5%, but the S&P 500 was slightly down at 0.1%, and the heavy tech NASDAQ was down as well at 0.3%. Many investors are watching to see how this will have an impact on the U.S. economy over the long run, and they are watching to see how Chairman Powell will continue to respond as they anticipate there will be more interest rate cuts throughout the year.
All right, thank you so much, Maria. But let's pivot now to Europe. Let's get a check on what's playing with markets there. We have Lars Holter with the details. Lars, great to have you. We finally have that 25 basis point cut in the U.S. I guess it's hooray in Europe.
Yes, it is definitely, Ladi, because that Fed lowering the interest rate. It is interesting how we all expected that. So you could really say this was pretty much a non-event because it was totally priced into markets, but it still helps markets up here quite a bit, actually, in Thursday's trading session. And not only in Frankfurt, we're currently seeing the FTSE 100 in London up by 0.25%. We're seeing the CAC 40 over in Paris up by 4%. And the DAX in Frankfurt, flat as it's been trading. It's actually up now by a quarter, by 1.25%. So actually the strongest index right now of all the European markets. Pretty good showing here in the aftermath of that Fed meeting. But some analysts are still warning already not to cheer and to celebrate too early. There seems to be some international money moving out of German shares in Frankfurt, and they can kind of track that behind the scenes. So pressure definitely remains, even though we might not be seeing it today.
All right, so let's take a closer look at the EU economy now. There's a new report out that's looking at the current situation on the continent. What can you tell us about this report?
Yes, Ladi. First and foremost, I can tell you that it's a very, very alarming report. Let me just quote a short paragraph. Europe's standing today is worse than a year ago. Our basis for economic growth is deteriorating. Also, let me quickly tell you who's behind that report. It's Mario Draghi, the former president of the European Central Bank, a very highly regarded economist who is currently serving as an economic advisor to EU Commission President Ursula von der Leyen. Last year, Draghi already published a similar report full of warnings and alarm bells, but like I said, this year's report cranks it up a notch. Draghi says the industrial basis in Europe is eroding. There's a dire lack of investment, and now that must hurt some people. He says that the European governments have apparently not understood the severity of the situation. His report is a desperate call for governments to act fast and decisively to ensure that Europe will not be entirely left behind in the global economic race.
All right, so, getting into the details, where do Europe's problems really stem from? Are there outside influences, or is it a homemade crisis?
Yeah, Ladi, it's both tragically. Let's start with the bigger picture. Obviously, when we're talking about a global economic race, we're talking about competition with the US and with China. And looking at the US first, we all know how the situation in terms of trade has deteriorated there. We had Trump's tariff threats, actually not just threats, but later on tariffs. We then had a trade agreement where the EU basically capitulated to Trump and accepted everything he asked for, with Mario Draghi in his report now saying that the EU completely failed to protect its own markets. He also says that the idea that we could replace parts of the US business with other markets is an illusion. And that's now here China is coming into play. That is because China is also having trouble with the US, and they are obviously rerouting much of their industrial output to the EU and to some other countries where EU firms now have a lot more competition. The only recent upside in trade, says Draghi, was the Mercosur trade agreement with the Southern American economies, but that won't make up what the EU is currently losing in other markets.
All right, we'll keep tracking that, but how about self-made problems then? How's that looking?
Yeah, those problems you would think could be solved, but it definitely wouldn't be easy either. Let's look at the main point Mr. Draghi is pointing out. He says the EU banning combustion engine cars, for example, is a mistake. Now, Ladi, we just talked about that particular topic here 2 or 3 days ago, and the EU is set to ban gas and diesel-driven cars by 2035, and there are a lot of reasons why they should be doing that. But Draghi says we won't be ready with our e-mobility infrastructure by then. And he says that the continent is shooting itself in the foot. He also says that the EU has to urgently give up its reservations over artificial intelligence. The continent is far behind when it comes to developing this crucial technology. Looking at foundation models, those are the AI training systems. The US has developed 40 last year. China has developed 15, and Europe came out with 3. Companies are also not implementing AI fast enough, says Draghi, and this will put us further behind as well. He's also talking about how high energy prices have to come down fast and how the EU has to speed up investment. Last year, he recommended investment of 800 billion euros per year, and now in this latest report, Draghi insists that Europe, and that is businesses as well as governments, have to invest more like 1.2 trillion euros per annum to not fall further behind. And that's a lot of money. And the whole report, I would really say, Ladi, if this isn't a wake-up call for the EU and all member states, then it's hard to fathom what else could lead to that drastic reforms we might need here.
Yeah, I'll definitely keep an eye on that report. Very interesting one. And I see what holds for the European economy. Thank you so much, Lars Holter, for the details. Thank you.
Thank you, Ladi.
All right, let's get a check on what's playing out with other markets now that are also reacting to the Fed rate cut of 25 basis points. And it's green on the screen across board. Bitcoin not left out. Ethereum 1.44%. BNB crossing $1,000 for the first time ever. Big move, definitely, across board with deep greens everywhere. And we see those pockets of reds. Those little ones, according to Coin360, those are stable coins showing that investors are really, really bullish, moving away from stability and putting some skin into the market at this time. Let's bring in Gilbert Jopata now, as a team lead at Smart Investor Lodge. Great to have you on the show, Gilbert.
It's a pleasure, Mr. Ladi. Good afternoon.
Fantastic. So we have the rate cut finally, 25 basis points. What are the smart investors doing with this?
Oh, well, we just moved into the Fed's policy, which signifies that they have capitulated. And this is because they realized they were wrong about inflation. But then what are smart investors doing? First of all, this happened to be a sell the news event. The second thing is that this rate cut was already priced in. And however, while we still have in the longer time frame, we are still up for an upward continuation, and I'm bullish for the next quarter of the year. And there are so many reasons why smart investors are bullish, because the Feds have entered a new easing period. We still anticipate more rate cuts to happen. This year we may have 2 more rate cuts this year, and from next year we will begin to have more rate cuts. And while the Feds have entered a new easing period, we are also going to have there is also more altcoin ETF entering into the market. So we are entering into a period that there is going to be an upward continuation as we move ahead into the market.
Right, and talking about most of these asset classes now, without the rate cuts, they still hit record highs. Is there a risk that even though we see these rate cuts coming, these asset classes might not go up as expected?
Well, we are already in a period where liquidity is flowing into altcoin. And however, within this period, but I think it's quite a significant event that despite the inflationary environment, despite the tariff war, we still saw Bitcoin and most altcoin, holding and also having an upward surge. The altcoin index have showed over 100 coins that still outperform BTC. We have Solana already building momentum for an upward continuation. BNB just hit a new all-time high. SUI is also building momentum for a new upward continuation. So altcoins are also prepared for continuous rate cuts. Altcoin is also, at the end of the summer, at the end of September, from October, we historically, alt, including Bitcoin, always perform well. So I think we are even entering a macroeconomic environment, and we also have some institutional money sitting on the sidelines. Don't also forget, as interest rates go lower, we are also going to have borrowing is going to be easier. So there is going to be new liquidity flow coming into the market. While some investors are on the sideline waiting for all this clarity, there is a liquidity flow that is going to come into the market moving forward. But of course, I don't expect this alt season to be like the typical alt season we used to have. Before now, the bull market is always BTC moves, Ethereum moves, Doge move, and then major market cap assets move We now have mid cap, small market cap, and almost everything move. But the market has come into maturity. We have millions of tokens being created probably in the market with the likes of Pump.Fund and the rest. So the liquidity available it cannot flow through every crypto out there. But those smart investors that position with the narrative and trend in the market will take advantage of the trend that is building momentum for an upsurge.
Fantastic. So much to unpack there, and so much to decide, for investors, especially in this crypto market. There are too many tokens out there. How can all of them rise? About 4 million or so. Thank you so much, Gilbert Opata, team lead, Smart Investor Lodge. Thank you for coming on today.
Yeah, thanks for having me.
And just like you see behind me, that's the color with most of the markets that we track today. We'll give you the TGIF trade. That's tomorrow. We'll see if it stays green. Thanks for watching. I'm Ladi Williams. Bye for now.